Buddy, it's Mark here again, and welcome back to Digi Profits. We have had some incredible news really go on in the last few days. We've had all of that action go on with Celcius, how they have paused withdrawals and so forth on their network, which has led to some massive price dumps across the board, a lot of cascading downward effect in crypto. We have had the Fed announce their 75-point basis rate hike, which is higher than most people anticipated. The anticipation was about 50 basis points. There was a bit of a leak just before it came out that it was likely to be 75, which is pretty crazy. We've had things go on with USDD looking like it is losing its peg, as we can see here, losing its dollar peg, which is quite bearish for both USDD and also for Tron as a network. If it did collapse, there is reason to believe that this is going to get sorted out, and it may not collapse. It might not end up being like Luna. That's for sure. So there's a reasonable chance that this comes out okay, but there is certainly that concern there. Same with the Celcius issue. People are concerned that when Celcius does allow withdrawals again, that people are going to sell not only the Celcius, but their Ethereum. There's like hundreds of millions of dollars worth of Ethereum on there, and it could all just get sold really quickly, leading to a big cascading downward spiral effect. So there's that. People worry also about Celcius getting liquidated if Bitcoin was to drop. Well, they have increased their reserves enough that it would now have to drop below 14,000 for them to get liquidated, and even then they might get more reserves in place. So it may not at all turn out like the Luna scenario, but it is reminding us again that right now, being in a macro bear market, there is that possibility that some major altcoins, if they are to falter in any way, shape or form, even close to like Luna did. I mean, Celsius dropped in price by a huge amount just upon their news of them blocking withdrawals. And if those sort of things happen, it can lead to a cascading downward effect and can certainly add to lower price action across all of crypto. Now, last time the Fed raised rates by 50 basis points, we noticed on the first initial announcement of that, Bitcoin went up. And once again, the same thing, Bitcoin's gone up. Is this simply a dead cat bounce? Last time it proved to be a dead cat bounce because then prices, like there was a lot of selling off, a lot of correlation to the stock market and so forth, which also after institutional investors made their decisions, because they don't always just decide the moment that the news is released, then all of a sudden, bam, there was that downward price action. Will that happen here? It might not, but we've got to be careful. So let's look at the price action at the moment. So at the moment, what we've found is we are holding on at the 200-week moving average. We have wicked below it. We've gone straight back up. In the past, when COVID hit for Bitcoin, we went below it, wicked below it, went back up, went all the way back up to there, then smashed all the way back down again, and then all the way back up again, and held it as support. And then it held as support here as well, held as support way back here, and before that we didn't have 200-week moving averages because Bitcoin hadn't been around long enough for it to be 200 weeks, although it did fit a logarithmic regression graph all the way back, where generally it holds around about where my white line is here, or thereabouts. So that's probably indicative that the fair value of Bitcoin is probably a bit higher than where we're at. It's not a bad accumulation zone, but that doesn't say that this isn't the bottom. And there's reason to believe that the bottom may be lower than it has ever been before in terms of the regression line. So, all of these statistics and stuff that we look at that have played out for Bitcoin have only played out over around about 12 years. Just remember that. It's only about 12 years. In the stock market, you will find that our RSI bottoms, and our qualitative easing bottoms as well, they're all around, in the last 12 years, around about the same spot. So if we go over to the S&P 500, you'll see round about there, round about there, round about there. The last 12 years, things have been around about the same. But you go back before 12 years ago, before Bitcoin existed, there are periods where it has been worse. Look, we've gone all the way down here, as I mentioned in my previous video. That's the subprime mortgage crisis. Same thing way further back during the dot-com bubble burst. Same thing in the 1987 stock market crash. Further back in the 1973 stock market crash as well, we find, we actually go a lot further down. And so Bitcoin, crypto, everyone's analyzing it as though this is going to play out like every other cycle we've ever had. But, the stock market can show us that you can have cycles play out the same way, or at least every 4 years, 3-4 years, they can all just play out the same way for a decade, and then suddenly, kabam, there's this macro bottom that's different, that's further down. We just haven't had that in crypto. I can't possibly believe that over the next 50 years to come that we're all going to just keep on following this regression curve, and it's just going to stay the same, and you're never going to have those bigger corrections and stuff like that. It just doesn't seem to be that way in any asset class, and I don't think crypto's immune to that either. I'm not saying that's going to happen right now, though. Some people believe that it's going to happen, but it's going to happen in 4 years' time or 6 years' time, and that the Fed and everything they're doing is going to buy us time. In which case, though, I still believe personally that the stock market will at least test the 200-day moving average, and it has not done that yet. Okay, I don't think that this is a better situation right now than those other periods where it's tested the 200-week moving average, tested the 200-week moving average. It may or may not be like, say, the subprime mortgage crisis, where it didn't just test it, it tested it again, went through it, and then it couldn't break back through up, and then kabam, it's like, how far below it is that? That's 50% below. 50% below. That's like the worst case scenario. I don't necessarily think that that's going to happen. I think it will at the very least test it. And it may even go a whole fib level below. And if that happens, then it's very, very hard not to see Bitcoin at least testing its next fib level down, and maybe the one below, which would make it test around the $18,000 mark. And if things get really bearish, and it's not that each fib level matches up with the stock market fib level, but if things did get supremely bearish on the stock market, then and combine that with some or one major or two minor cryptocurrencies that are in the top 100 absolutely collapsing, you could see it go down as low as that $11,000 range, $11,500 range here. These are Fibonacci levels. They often prove to be very accurate, but you can also see historically there was a lot of support, or at least resistance there to break through, but that would also hold as support, you would imagine, on the way down. It's not so historically. It's been it's been a zone that the prices sort of lingered around for several weeks at different points in time. Some people will argue that the macro top the bull market top from last time and this little period of a few weeks here where it held support there shows there's a lot of possible support in that range. I don't know. I tend to find the fib levels to be a little bit more accurate than looking at past support levels, although they both can give you at least an indication of how far things may rise or fall when a certain event happens. Now, we have had a bounce though. So far, the markets have shown that they have reacted positively to what the Fed are doing, and that they are acting responsibly by increasing interest rates. Okay, that's what the markets are saying so far, but it's only been 1 day. Some of the major institutional investors have to go have a board meeting, have to make decisions, have to go do stuff. I mean, it could take a whole week to play out before you really know what has happened here. And that's what happened at the last meeting. Last time things went up short term, very short term, didn't last long. 1 day later, bam, things started moving down, and then you end up with several weekly candles in a row where it's down, 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 and it's all red. So just be careful with what you're doing with that regard. Okay, so what I want to just quickly just mention again is the reason why, say, if a coin like USDD loses its peg, that is similar to if UST lost its peg, but it's calculated a little differently. It's not necessarily going to cause quite the same response, but not too far off in terms of the fact that Tron, TRX, would certainly go into a very bad situation if this was to lose its peg. The market would panic, and you would also end up with a lot of liquidity pools that have Tron, that have USDD in them. All of a sudden, they would all be dropping in value, and then the coins that are in those pairs that are in other liquidity pools would drop in value. You'd have this cascading spiral downwards. So automatic selling is pushing the crypto market down in that case. It's not necessarily a matter of buyers and sellers. This is computers making the trades, selling off, buying Bitcoin, selling Bitcoin, buying Ethereum, selling Ethereum. That's what can lead to the really, really fast meltdowns. That combined with, there's a lot of people that think that Bitcoin can't really go far below the 200-week moving average because it never has before. It gets wicked down, but that's about it. So they think that the moment it hits there, that's the bottom, and they run high leverage trades. High leverage. So if they have high leverage trades and there's all this automatic selling and what have you pushing the price down, then the bears get in and start selling. Crypto miners who are worried about all their crypto mining that they're doing right now becoming worth less, some of them end up selling a lot. Next thing you know, bam, those people get liquidated because they've leveraged too high. They didn't expect that there's the possibility that things could go lower than they ever have before, and then bam, you end up going straight through, possibly even through that fib level, and then you're in a territory where people are like, wait a minute, we didn't think this could possibly happen, and then they don't know how to do their calculations and so forth, and then there's a lot of panic, and you could easily go down to and find a floor down here. I'd like to think that the floor is not this $3,000 level. And that's not to say there aren't support levels historically in between, but I'd like to think it wouldn't just smash straight from there to there. It's just the way I've done my fib levels. I haven't done the sub fib levels in between on the larger gap, but I would look at doing that if it got down that far. Okay, so don't be deterministic about this stuff. We could totally have a bounce, and if we did bounce, you would be looking at 27k is, I guess, a possible point that it could be quite difficult to break through. So I would imagine that if we were going to get out of here, you'd probably end up bouncing around in there a little bit before you pushed through anyway. You're not really bullish though until we break past at least a couple of fib levels up. So that'd be the $33,000 mark. I would like to see that we pass through $33,000. Then there's a very big possibility at that point that you're back in more of a macro. Look at the angle of this. You would be more of a macro uptrend now at that point if you're breaking through there and you're closing above the $30-something thousand mark, and particularly if you break that 41,840 mark, then that's a lot of consistent movement upwards, but that could take a while. Okay, so looking at the RSI average for Bitcoin, that usually touches around about on the weekly about 35. It has not touched the 35 yet. Okay, so I would say we'd probably, to reach a bottom, you'd probably think at the very least, even if you're being ultra bullish, you'd probably say we're probably going to at least hang around these prices here or flash up and flash down back to them again before we end up getting anywhere significant. Also, if you were to look at this from a market psychology point of view, there's been many times that this pattern has played out where you end up with bull run, the subtle warning that things are sort of dropping in price, but then bam, we're back up here, and then people think, right, it's going to be a bull run forever, but then no, there's this other little subtle warning, nope, there's a drop here, and then some people don't see it, then they're worried, they're depressed, all of that sort of stuff, and then you've got your wall of worry coming all the way up to here, and then you've got your your anxiety and your final capitulation to there, and then people don't even believe it when you're coming up. You bounce down, they don't believe that they're in the bull run until they're up about here, and they've missed half the bull run, and then you end up, up at a new all-time high. That has played out many times in the stock market on many occasions, but I don't want you to think that that means that this is the bottom, because it could play out exactly like that and end up here first. Okay? It could end up here first, or it may not be that exact market structure. It could be more of a double top structure that ends up more like down here. So just got to play it safe. Be wary that there are a lot of factors in the world that can lead to these things happening. Things don't happen because of technical analysis. Technical analysis just gives you targets for where things will find resistance or support. So, I mean, there's oil prices. So if Russia stays in the Ukraine and all those sanctions stay, it's not ideal. 1973, there was a big stock market crash after months of embargoes from OPEC on oil exports, caused prices of oils to just keep going up and up and up and up, and there were supply chain issues, and it eventually played out that, I know here in New Zealand, and I was not alive at that time, but I know that people had days of the week where they weren't allowed to drive their car. Stuff like that was going on, apparently. Pretty crazy. So, and I don't know what happened in your country, but if you're watching this video, but and that probably won't happen like that this time. It'd be a bit different, but that's just to say there's evidence that there has been a major stock market crash simply because of oil prices getting out of hand. And oil prices take a while to get out of hand. So that's always lingering in the background. But it would be bullish if Russia pulled out of the Ukraine and eventually had sanctions reduced, even if not completely taken away. And then there's, obviously, like I said, there's the possibility of other cryptocurrencies having a little meltdown, which could drag everything down due to overexposure in the market, not expecting this downturn to go as far as it did. And then there's the possibility of a lot of assets, stock market and so forth, to take a tumble as people go risk off. And if that is the case, and Bitcoin is highly correlated to those tech stocks, then that would likely be another thing that could be bearish on the price for now. So I'm still at the moment anticipating that it won't be till later in the year, like we're talking, it could be September or something like that, that we find that we really are bottoming out. And it may even be not till the end of the year, could even be next year. Like, it's not going to be too deterministic, but if I had to guess, if I had to guess and put some money on it, I'd say September, I think around about then. But I'm not always right about these things, so just take what I say with a grain of salt, and I hope that it helps you in your decisions. So totally, we could be at the bottom right now, could be just 200-week moving average. That's what we've done in the past at times, and then it could just bounce around and do this, and then end up coming up, flattening across, and then you're in your bull run. I guess the equivalent of that to that would be you're in your bull run midway through next year. You're starting your process of going across, and then it'll be maybe 2024 is where you see this action. That's your best case scenario. Your middle scenario is that we end up coming across here, and we finish, like, we go up and down and up and down. We finish about here, say, and then we go up, and then our worst case scenario, I think, would be, well, I think it'll be down here. I don't think it would be down here. Technically, I guess the worst case scenario is 0, but I think that would be more of a likely worst case scenario, would be that 11 at 389. Bitcoin would have dropped 85% from its all-time high or thereabouts, which it has done 3 times in its history, and then that has been the bottom in those cases when that has happened. But that would certainly take a lot of little events to have to all occur for that to happen. So keep safe, don't go all in on this stuff. And consider that this is still historically always a good price to buy in on Bitcoin. But if you look at the Bitcoin dominance, during periods like this, the dominance tends to go up. Like when things are looking bullish, like see how things were bullish here and during this time, not on this graph, but during this time, like when Bitcoin gets out of its downtrend and then ends up going on a bull run, usually you find Bitcoin leads the bull run. Bitcoin goes first. Dominance goes up. Dominance is around 70% or something like that historically, or it's something quite high. And then when Bitcoin is really taken off and it's already halfway towards what's going to be its new all-time high, then the altcoins come in and do really well, and Bitcoin is still doing well, but its dominance is dropping and dropping while all this money's going into altcoins at that point. It's not normally altcoins going first. So be careful with your altcoin positions. It's probably likely that you'll find the bottom for Bitcoin before you see the bottom for some of the altcoins, or at the very least, you find that Bitcoin, if it makes its bottom at the same time, it goes up first. And then, like in terms of, it might say go up by 20%, and then the altcoins are only going up by 15 because of every time it drops down, altcoins bleed, because it doesn't go in a straight line like that. If it just went straight up, they'd all go together, but because it bounces its way up, until people are risk on, the altcoins don't tend to outperform Bitcoin. Okay, that's it from this particular video. If you like what I have to share, please share this video with other people. Please like the video, subscribe to the channel, leave a comment. All of those things help in terms of YouTube knowing that this is a good channel worth its time to share with other people, and I really appreciate it. Hit that bell so that you see notifications when I release new posts and videos, and I'll see you in the next one. Bye for now, everybody.